Okay, welcome everybody to the Global Energy Outlook Forum, looking ahead to 2025. We are now in the new year, believe it or not. We are in our Asia session of this 12-hour round the world forecast for the year ahead in the energy markets. And I'm delighted on this panel to be joined by Marc Howson, Head of Asia Welligence Analytics, Mriganka Jaipuriyar, Global Head of Metals and Agriculture News at S&P Global Commodity Insights, and Yuri Humber, Founder and President of Japan NRG Platform and Yuri Group. Thanks so much for joining us. We're going to be focusing, the first hour and a half or so of this forum has focused on oil in Asia, oil demand and any factors influencing that. We're now going to turn our attention, of course, in this session to LNG demand and look at how the Southeast Asian economies are forecasted to be doing and how that might impact their demand and LNG global dynamics. So, Marc, let me start by going to you and give us, before we look at demand, I'd like to go to you to give us a bit of a supply picture. Because, of course, we don't want to look back at 2024, but the LNG picture has looked quite comfortable, and a bit tighter perhaps last year. But going forward now, as we enter 2025, with new supply coming on stream, of course, and those long-term plans, what is the supply picture looking like? And most importantly, what does that tell us about what prices are going to be doing?
Well, thanks for having us on today, Dyala. Real pleasure to be here. And you're right to briefly highlight last year because it was quite a strange year in the sense that the market started off well supplied. Prices of spot gas into Europe, but also Asia, were in the single digits, under $10 per MMBTU, and they steadily crept up in the second half of the year to $15 per MMBTU. So obviously a 50% increase over the course of last year. And that was very much driven by three main factors. The first one was a more normal return to winter temperatures and weather patterns, particularly in Europe, but also here in North Asia, where it's particularly cold at the moment. And that's obviously pulled down European gas inventories, which were over 90% this time last year to around 70% today. So more normal seasonal pattern. And then, of course, that was combined, I think you alluded to, with less supply starting up last year. We just saw three projects just literally begin their first gas into LNG export projects in December. That was the GTA LNG BP project in West Africa and the Sabine Pass Stage 3 Cheniere project in the US, as well as the Plaquemines LNG Venture Global project in the US as well. So a lot less supply than we were expecting last year. Obviously, colder temperatures. And then the third factor that some in the market weren't expecting was this stop for the first time in several decades of Russian piped gas supply into Europe that happened on the 1st of January this year. So that wasn't a huge proportion of European gas supply coming from Russian piped, around 5%, but enough in combined with those other factors to keep prices at the $15 per MMBTU range at the moment. And we see prices, obviously, they'll go through the kind of shoulder season dips, but staying elevated at similar levels throughout the course of this year. Because if you look at where the new supplies coming from and when it's coming on stream, it's only gradually building up throughout the course of the year. So not much new supply, but at the same time, the North Hemisphere countries will need to replenish their gas stocks over the course of 2025. So continue.
Okay, Marc, thank you.
Tightness
So
in
that's
the market.
tightness, and so a sort of bullish price outlook, let's say. Yuri, let me go to you on that. Of course, in Japan, of course, an LNG consumer, albeit with changing energy policy dynamics. We can talk a bit about that later on. How is Japan looking at the LNG sort of import scenario going forward in 2025 from a price point of view, and how is that impacting perhaps its other decisions on its energy mix?
Thank you very much, Dyala. And thank you for inviting me on. I think that with Japan's LNG, previously the world's top LNG importer just sort of recently handed over that title to China. I think there is a story essentially of two futures. One is the short-term future which is what I'll talk about now. Maybe the further out future with the policy changes that we can talk about later on. But in the short-term dynamics, we have essentially a policy outlook that said that by the end of this decade, Japan will be using or should be using about half the LNG that it had been in the previous decade for power generation. That hasn't actually translated into quite the kind of steep drop that the numbers forecast. However, there has been obviously a little bit of a lull in the industry for several reasons. One, because of the policy direction. Two, because of the nature of the changing dynamics, the competitive dynamics in the electricity market, which is where Japan uses a lot of the LNG. So with the competitive dynamics of renewables and more nuclear restarts and so on, there has been a tendency on the Japanese buyer side not to overcommit, not to basically afford yourself the luxury of having too much, because it would be too expensive, or rather more expensive than undercommitting and then dipping into the spot market for the occasional cargo. So I think that this moment, what we're at is that the government has published a new draft for a new basic energy plan that seems to be a little more favorable and seems to say that it continues to see LNG as a strong transition fuel and as a strong energy fuel for Japan. And therefore, that should actually help to bring back some of the confidence that we have been feeling from a lot of the industry leaders in the gas industry and LNG industry in Japan over the past year. However, if you look at the numbers closely, although the government is urging companies to get back into, let's say, that more cautious oversupply mode and to make sure that they keep to long-term contracts and retain long-term contracts, the reality is that, with 5 years away, 2030, the new energy plan draft at least doesn't, it assumes that LNG will have a brighter future if there is a decline in coal use. And I think that's probably not quite as much as a given as many people would think. So for the moment, I would say that, Japan's LNG imports we're likely to see the official figures come out saying that something like a 2.5% year-on-year drop last year to, let's say, about 65 million tons. And for the rest of this decade, I think that, with a few more nuclear restarts to come, I would imagine that Japan would continue sort of a steady decline, maybe being around the 60 to 65 million ton import level per annum.
Okay, thanks, Yuri, for that. That great intro to that outlook for Japan. Mriganka, let me go to you and welcome again. Let's talk a bit about that sort of also the transition side of things. A lot of Southeast Asian and South Asian countries trying to transition away from coal, of course, but that's all going to be very much dependent on prices, isn't it? Affordability of LNG. So give us your perspective on where those countries are, realistically speaking, in transitioning away from coal, again, with the outlook for even short-term year-ahead LNG prices. Are we going to really see those ambitious plans happen as has been laid out, or are we facing, with a tighter market and relatively elevated prices, a delay in that? Oh, you're on mute, Mriganka. You'll have to unmute yourself. Thank you.
Sorry about that. I was just saying thank you for having me over on this. It's a very interesting panel that we have out here today. When it comes to energy transition in Asia and LNG being an energy transition fuel in Asia, Asia is very heterogeneous, right? Different countries are at different stages of development. So, for example, Japan, South Korea, Singapore, LNG is already a big part of their power generation mix. When you come to the mid-income countries like China, India, LNG sits alongside all the other fuels for power generation. So, and coal is a big part of that. Renewables is slowly becoming a big part of that. When it comes to the lower income countries, and that's where we are seeing the emerging buyers, right? You've got Pakistan, Bangladesh, Philippines, Vietnam, and now you've got Cambodia coming into the LNG markets as well. So it's a very different dynamic there. And that's where, so it's in the mid and low income countries that price sensitivity is, of course, a huge factor at play. But if you were to look at the factors driving demand in this part of the world, you've got strong growth in power demand. So we're expecting power demand to grow by about 75% from now. I'm looking at a long term, right now to 2040. You've got low piped gas supply. The Philippines has completely run out of its natural gas supply. You've got the other factor being policy support for LNG. If you look at Indonesia's power development plan, there's a clear shift away from coal. There's bringing in more LNG, bringing in more renewables. The same is for Vietnam as well. There's a strong push towards using more and more LNG in the power mix. So you've got strong policy support, declining domestic gas supplies, and rising power demand. Price sensitivity is, of course, a big factor. So, if you look at price forecasts for this year, we are in sync with what Marc said. We're expecting the JKM, which is the Japan-Korea marker, to be about $14, in the $14 to $15 range for this year. But if you look further out, you are expecting a big chunk of supply to come in. You're expecting this price to basically start declining. And the interesting thing about Asia is that at every price level, you have different countries coming in to buy. So the sweet spot for China is $12 per MMBTU. So the moment prices slip to $12, you'll have the Chinese come in to buy. The sweet spot for India is about $10, and that's when they come into the spot market. The sweet spot for the developing countries, the poorer countries in Asia, is single-digit LNG prices. So it's a very interesting dynamic. It's of course lots of variables, and it's very hard to pinpoint. But I think broadly speaking, yes, there is a trend away from coal-fired power generation. Countries are finding it hard to get financing for coal-fired power generation. To take Cambodia's example, they've had to move from coal to gas because China said it's no longer funding overseas coal-fired power plants. So there is that trend, and that's when gas is going to come in, especially as prices start to decline as a transition fuel. So very much there to be a transition fuel.
Yeah, thank you, Mriganka. Thank you very much. Well, Marc, let's touch on China, because I wanted to go to, we've talked about the middle to low income countries. China, of course, a big consumer of LNG, and we had a lot of comments earlier in our oil focused sessions on how serious China's transition is to EVs. Of course, one big also transition is LNG trucking, etc. LNG for trucking. Marc, how much is the LNG supplier market looking at China in terms of, holding the position it has held in terms of its LNG consumption? Do we see that increasing going forward? How critical is it to those who are exporting LNG, such as America, for example, to Asia?
Yeah, that's the other key topic in the market. We spoke about Europe, but the other biggest buyer in the world at the moment is China, Dyala. And like you rightly highlighted, demand was particularly bullish in 2024 for LNG in China, like you say, driven particularly by that transportation sector that quite frankly shocked us all. So we do expect almost 80 million tons of LNG to go into China in 2024, which is an increase of around about 9% year on year. Now, what there is a consensus over is that Chinese demand will continue to grow robustly, because obviously as gas gets its increased penetration in the market, and China has limited other supply options. Obviously, they're now importing gas into the inland areas from Russia, and there are plans to expand that pipeline, but that will take several years. Myanmar is the other pipe gas supplier that is short of gas as well. But what to me was very interesting is when this European market started to need more LNG in October, Chinese monthly LNG demand actually fell by, I think it was 12%. So whereas before Europe was the more price sensitive market for LNG cargoes, it now seems like China is playing that role. So when the market does tighten up, and we do expect it to, as I say, stay tight this year, that demand growth for LNG in China will be subdued. However, the European demand will very much pick up. European LNG imports last year were down at around about 100 million tons per annum, and we expect that to creep up towards 130 million tons per annum in 2025 at the expense of very fast Chinese growth.
Okay, that's interesting because of course, when we had the whole, not to look back too far, but of course when the Russia-Ukraine war started, it was all about, well, who's going to be able to grab that LNG, for example, from America, and of course Europe was in a stronger position than China coming out of COVID, etc. So those dynamics obviously continue to shift. Thanks, Marc. Yuri, let's talk a bit about US LNG, but regards to coming obviously to Asia, Japan also, and its particular dynamic. I know, and you've mentioned to us before on our other programs, has been trying to sort of negotiate, more sort of spot contracts, not having to commit to these contract terms, and the US perhaps offering it better terms than the Gulf producers, who would usually be the primary suppliers into Japan. So where's that dynamic going forward in 2025? Do you see more US LNG coming into Japan? We've got Trump coming in, letting loose on whatever energy exporters want to do from the United States, obviously.
Right. Well, exactly. As you mentioned, I think one of the headlines at the end of last year was the European Union saying, well, why don't we just buy more LNG from the US as a way to mending offenses? I think in Japan's case, Japan's already a very big buyer of US LNG. And as I mentioned in the earlier comment, Japan itself isn't necessarily a growing LNG market. There are a couple of bullish factors for LNG demand growth. Certainly, you mentioned earlier about the changing demand dynamics from the AI and the other tech sector. So if indeed we're no longer in a zero-sum game, which is to say that the electricity pie is expanding, then we don't need to fight so much over market share. And it is very much possible for the LNG market in Japan to then get back into growth because, there is at least some compromise of pragmatic consideration now starting to take place that perhaps, renewables in certain countries like Japan, for example, are not going to be able to cover 100% of all the new data centers and semiconductor plants and so on. But so there is a growth scenario and maybe a couple of other factors that could take off. However, if there isn't much of a growth scenario and we stay, as I said, towards the 65 million ton per annum import level, and then we look further at the energy transition scenarios that are being painted by the government, which are perhaps, the Japanese government, which are perhaps maybe influenced still by the events of recent years, the COP26 meeting in UK and so forth. Then we really see a very strong push towards not just renewables but hydrogen, synthetic fuels, and so on. Now, in some of those energy transition pathways, LNG or gas still plays a role because it is part of the some of the synthetic fuel, e-methane, and etc. options. However, if there isn't, then what is going to give? Right? If Japan is going to buy more US LNG and commit to certain more volumes, which I'm sure it will, and there will be a few more contracts announced, most likely soon after the Donald Trump assumes the presidency.
But just to interrupt you there, Yuri, and how is that immediately going to impact, for example, Gulf LNG exports into Japan? Are we going to see that change going forward because of Trump, because of any policy change in the US, or will it make no difference to Japan?
I think that Japan, first of all, Japan isn't going to pull out of any long-term contracts, and that's for sure. The other thing is Japan is very keen to make sure that it has a diversified LNG portfolio, and that means it definitely won't sort of entirely abandon certain markets, for example, the Middle East suppliers. However, you can and will see a certain rebalancing of the portfolio that won't necessarily impact the Middle East suppliers the most, but it could impact some of the other suppliers. So one of the geopolitical considerations has been, Japan has a lot of Russian LNG contracts coming up for renewal. Will it renew them or not? Mm-hmm. The previous geopolitical dynamics coming from the previous White House administration in the US, or the outgoing one, I should say, was, you shouldn't continue buying from Russia. But maybe for President Trump, that isn't a consideration. There is also the issue of Australian LNG. Now, Australia LNG, as you know, is the biggest dominant LNG supplier to Japan, much sort of head and shoulders above some of the other countries. But Australia has also been on a much more sort of net zero pathway and has talked about potentially limiting its exports. That has been dialed down, but that means Japan is going to try and continue diversification of its LNG supplies, as it has done previous year. I think it had something like 20 different suppliers, but it's scale. Not every supplier is able to offer the kind of scale that, for example, the Middle East suppliers can. So it's a question then of contracts. What are the contract terms? Is there enough flexibility to set another contract that isn't too constrained on the Japanese buyer side? And if so, then I think they'll still be good business.
Well, let me go to Mark on that contract terms topic, because it is an interesting one, isn't it, Mark? With more supply coming on stream from the US, as time goes on, of course, it taking its position as the top exporter now, and it overtook Qatar, of course. But with again, back to sort of supply and competition, if you like, with ample supply coming on board the next 2-3 years, do we see that spot versus contract competition, if you like, weakening? Are buyers going to have more say? If you like, and where does that put them, especially for poorer countries who are more sensitive to prices?
Yes, very, very much, Dyala, and certainly over the medium and long term, as I say, the market will probably stay tight in 2025. But going forwards, as you rightly highlighted, with the increasing amount of LNG coming out of the US by 2025, the US will supply over 25% of all global cargoes, and that, of course, is generally destination flexible LNG that can easily be resold and be shipped into whichever market is prepared to pay the higher price. And a lot of that is in the hands of portfolio players who can do exactly that. So, like you say, an increasing amount of LNG traded as spot short-term cargoes because of the US. And then, of course, remember, as Yuri rightly highlighted, the Japanese contracts out of Sakhalin in Russia, but also the legacy contracts, some of them out of Malaysia, but also Indonesia, starting to roll off in the next few years. And of course, that means that those volumes are more likely to be sold on a spot and short-term basis, because the supplier no longer needs the financing of long-term contracts in order to construct the liquefaction facility. So certainly the market is moving into a more liquid phase, but by the same token, most of the volumes will still be tied up by long-term contracts, particularly legacy contracts, to ensure security of gas supply for particularly North Asia, Japan, Korea, and Taiwan.
Thanks, Mark. Yeah, Mriganka, yeah, maybe you want to add to that, but I wanted to ask you, okay, did you want to comment on that? No, you sound okay. Well, before I go to you on the next question, let's look at that survey question that's just come up for us. So what's the primary challenge for Asia in meeting its growing LNG demand? Of course, as Mriganka pointed out earlier, diverse consumers within Asia in terms of affordability and where they come in on the price point. But what's the primary challenge? Is it their just overall reliance on imports and global supply chain stability, the geopolitics perhaps starting to play into that more going forward? Wait and see high LNG prices from alternative suppliers, or is it limited domestic natural gas resources? And I wanted Mriganka to actually talk to you about that third point, that a lot of these countries do have domestic gas resources, but of course the financing of trying to bring those to fruition competitively with what they might be importing. How do you see that dynamic going forward? Could we see, for the sake of energy security, some of the poorer countries being able to garner more finance into boosting their domestic gas supply, or will they continue to overly rely on imports and just try and manage that price equation?
Yeah, I think a reliance on imports is definitely going to be key to these countries. And I think the switch in the alternatives are going to be, sorry, my lights just went off, but
You're fine. You look
okay.
No problem.
Yeah, but so coming back to the alternatives that they're going to be grappling with is going to be more either are you going to go for more coal supply, or are you going to be able to build out renewables? Domestic gas availability in a lot of these countries is becoming limited. And with the addition of things like carbon capture, CCUS, in order to make that gas production greener, it's going to add to their cost of producing that gas. So limited supply, higher cost of producing that gas, LNG imports is definitely going to be part and parcel of their energy security plans going forward. And like I said, it's going to be a shift depending on the price of LNG and depending on the country's net zero plans and net zero targets. It's going to be a shift between, do we go for more nuclear? Do we go for more coal, more renewables? How is the renewable grid capacity going to build out? Or do we go for more LNG? And price sensitivity is going to be a key factor in driving all of this.
Okay, thanks, Mriganka. Marc, just back to you. You touched on Russian pipeline gas and the dynamics that we're going to see going forward. Again, I don't want to look back, but going forward into the year ahead, we see, obviously, we might see the Russia-Ukraine dynamic shifting on the geopolitical front. But also there's been some commentary that actually Russian pipeline gas into Europe has not been as limited as some people have been espousing in the last year or two, right? And so going forward, is that what you're kind of nodding in agreement there? Could we see more of that come in as we potentially go towards a stalemate or even solution to the Russia-Ukraine war?
Well, certainly, like I mentioned, the Russian pipe supplies into Europe were making up around 5% of total European demand until the 1st of January. But in a way, what's more surprising to a lot of people is Russia contributed, was actually the second biggest LNG shipper into Europe, contributing almost 20% of total European kind of LNG imports last year. Now, the Europeans are obviously planning by 2027 to kind of completely reduce reliance on kind of Russian gas or LNG. And then the plan is also to kind of ban transshipments of LNG that's currently taking place in France, Spain, and Belgium later this year as well. And as I mentioned, that the kind of pipe deliveries have stopped for the first time in many decades. So gradually, Europe's obviously trying to wean itself off what, you're right, has kind of surprised a lot of people even last year, were relatively high reliance on Russian gas.
And that presumably puts China and others in Asia in a much better position, because the competition for any gas that's coming out of US or wherever it might be coming from is not going to be so hot, putting aside other seasonal factors, for example. But if you look at a 2-3 year outlook, that puts Asia in a positive position, particularly with all the supply coming on stream.
Yes, yeah. I mean, I guess it's not quite as easy as that because, for example, the Arctic 2 project did come on stream last year and started producing, but because of kind of heavy Western sanctions, it couldn't actually ship very much of its LNG, quite frankly, anywhere. Because the sanctions targeted the shipping, and then also the volumes from Yamal LNG, certainly in the winter months in the northern hemisphere, i.e. now, it's very tricky to get them into the Asian markets unless there is that transshipment that does take place in Europe. So it's not quite as easy as saying Russia can just easily switch the volumes into Asia, but certainly there will be some of that.
Okay, and of course, we've got to still see the dynamics of what the US will do in its energy policy with Trump coming in and how that's going to impact flows in general. And we don't have to wait too long to see that. Well, we're coming up to the wrap up at the end of our session. Yuri, I'll go to you for closing comment, but there's the survey result, more not equally distributed, but quite evenly distributed, high energy prices from alternative suppliers. That is the primary challenge. It's reliant on certain suppliers so far, and how can it, the whole diversifying its energy sources. But of course, we've got some very large players there who will continue to dominate. Yuri, you'll give you 1 minute to comment on with a new US administration coming in to run the show. in the United States. Any takeaways from any immediate effects that might have on consumers like Japan?
I think, to be honest, I think the biggest takeaway is a little bit what Mriganka was talking about earlier. There's a lot of price constraints on LNG from the environmental side. Japan has a full carbon credits, carbon tax, and various other programs in place for the power sector too that will start to kick in towards the end of this decade. And there are commitments, to the UN and DCs and so on. Now, if the Trump administration comes in and basically walks out of the Paris Agreement and then tries to essentially pull apart the kind of climate-focused network that has been built up over the previous years and make basically the climate concerns less of a concern or less, then perhaps we don't have some of the cost constraints on LNG. Now, is that a good thing? That's obviously a separate debate, but at least that's something that Japan will be looking at.
Okay, and that's certainly something that could very well happen, given the rhetoric we've heard so far. Thank you so much to Marc, Howson, Mriganka, Jaipuriyar, and Yuri Humber for joining us. We've finished our session now on Asia. Please do stay tuned in to our other sessions coming up for the region and, of course, moving into Middle East, Europe, and America throughout the rest of the day. Great to have you all with us. Thank you.